Hello guys, it was typical day today, very clear cut move based on the typical day, and one can safely draw the initial balance and all the market move. Yes, if you have learned very well, then you can probably judge very clear. Okay, so let's have a look on the chart. So here, as soon as market is open and it is moving on the higher side, if you have watched very carefully during the very first candle, then you might have seen that some of the option price was moved on the higher side, then again it is falling, and then some stagnant move, no clear cut move. Here also, as soon as market is trying to go somewhat on the higher side, but there is no move in the options price. But as soon as in 923, as soon as market is moving on the higher side, with the very big fluctuations, you can go and enter above this very first candle high. As soon as price is crossing this very first candle high, you have to make an entry. Why you can make the entry? Yes, that's it. If there is a fluctuation, very big fluctuation, or with very high volatile, then you can go for the trade, okay, and go and capture some movements, okay. But another point which is adding somewhat more conviction for this trade, that is nothing but as market is opening somewhat very low and market approach that 20 EMA in the daily time frame for retesting. So as soon as it is touching that, it is started to moving on the higher side. But clear cut entry was at 923. Okay, and I also shared one screenshot which I have taken. Okay, my trade entry at some 923 and 14 second like that. I didn't remember exact second. If you want to see that, then kindly go for the Telegram channel. Now, you have, as soon as you have make an entry over here, what should be your target? That your target should be the market profile POC. Your target should be market profile POC, which is at here. Let me change this to the 1 minute time frame chart again, so you can have very clear cut idea how. So look, our entry at here and close at here, exit at over here, somewhere around here like that. Why? Because as soon as it is reaching this POC, the fluctuations somewhat slowed down. Okay, if you have watched this during the live market, then you can feel that, as I also felt that. That is why I am saying this. You have to make an exit over here, aggressive exit over here. That's it. That is your very first trade. Okay, do not try to go and grab whole rally. No, take in the part, that will be very better. Okay, diversify your trade. Diversify your trade like you are diversifying your portfolio like that. So your exit over here. Then again in this candle, as soon as market is again reaching on the higher side with big fluctuations, probably you can go and enter somewhere around here or on the higher side at this candle high. Okay, at this candle high. Why? Let's have a look in the 5 minute time frame chart now, because multiple time frame analysis is very important. Whenever you are having mastery in the multiple time frame analysis, guys, trust me, you are going to have the money from the market. That's it. Okay, multiple time frame analysis is very good. Now, why we have to take an entry over here? Because market made two base candles over here. Before that one rally. Now again it is trying for the rally, and at this point it is also crossing the 20 EM in the 5 minute time frame chart as well. Yes, above is the CPR, but we can take the trade. Why? Because the probability of typical day is going to be high. Why? Because of the fluctuations. Because on the typical day you are going to have very high volatile fluctuations in the price movements. Okay, and also if you look at here from the low to this high, this is more than 300 point, more than 350 points. So that is why this is nothing but the wide initial balance, and as market still has the big fluctuations, big volatile moves, so you can go and take the entry over here. What about your target? For that, we have to again go for the 15 minute time frame chart. Okay, 15 minute time frame chart, and let me enable. Oh, let me refresh this. Let me enable the CAMARILLA and all such things. I am disabling this POC. Okay, the market profile. Now, as you are entering at your entry would be somewhere around here. As soon as market is going on the higher side and it is approaching the 20 EMA in the 50-minute time frame chart, and it is also crossing that with the big momentum candle and candle closing above that particular level. So it is very important that you are trail this trade. Why? Because there is the higher probability that market may go for the 50 EMA, but market is not going to at the 50 EMA in the 5-minute in the 15-minute time frame chart. Why? Because here, if you have seen, this gap is quite very much big compared to this wall rally. As soon as market is approaching these levels with very big volatile move, market may have to take some rest. Okay, so that is why you must have to target this DR4. Very first, you have to target DR4, and as soon as your target is done of the DR4, you have to make an exit. And also, if you have if you are watching this in the live market and in different time frames, and so you can probably judge the market move. You can judge. Okay, you can definitely have that conviction that yes, market is feeling something resistance now. Okay, and probably you can get the exit. So your entry at this, and again exit at this level. So again, some more than 200 point or say 250 points. So that will be reflected something more than 200 point in your option, because as there is the volatility, the gamma will be high, vega will be high, and so delta also will be high. So that is why option price will be also high. Okay, so you can get more than 200 point within this this second trade. In the very first trade, from this to this, something 160 points. So 160 and 250 points. So it was very nice profit. That's it. And also I have shared in the Telegram channel that my day is done, and now I am going to analyze. That's it. Now learning part. This was from the trading part. Now learning part, because this is very important. Because many participants, many traders, might be you. क्या करते हो? What you are doing? After the initial balance formation, if there is the volatility, still you are going to take the trade. Yes, this is the typical day. Let's say you are knowing about the 6 types of market days, initial balance and the 6 types of market days. Now, as market is reversing with the big fluctuation on the lower side, very first on the higher side, now second on the lower side. Now again, what general people, what beginner or what retail trader, what novice trader will do? They again go for the put buying. Okay, on the sell side, put buying, or in the future sell side. Guys, trust me, if you have traded in this price movement, then do not try to trade over here. Whatever the move is there, whatever, ignore. If you are the intraday trader and if you have traded on intraday base, then avoid the trading after the initial balance formation whenever you are having the typical day. Whenever. Okay, but what to do after that? If you have any chart pattern after the initial balance formation on the typical day, then you can go for the trade. Else you have to ignore. Guys, in the next video, I am going to upload that video today. Okay, today. After the completion of this video, what you have to do is you have to watch the next video, which is going to be uploaded on this YouTube channel about the repetition, and that is going to be very interesting. If you are very serious to learn about these 6 types of market days and want to know about the importance of this, and want to grab some idea about the price action, what is actual price action? Okay, it's not only about the support and resistance, supply demand. No, that is something beyond that. Okay, so if you really want to learn something, then kindly watch the next video based on the repetition. I'm going to show something very interesting on the typical day. Okay, based on today's market move, because today's market move is very fantastic. So kindly must watch the next video as well. So here, as market is falling, what I have told, you should not trade anything. Yes, the fall is total about 400 points. So 380 points, so in round figure 400 points, let's consider. You do not have to trade anything. Anything. You do not know. Even I don't know whether market is going to reverse or market may have to go on the lower side. Okay, I have told in the Telegram channel about the initial balance may break over here. Okay, where I have shared something. Where? 1 minute, guys. Here, lower boundary may broken because POC is very near to that, else regular typical day. Okay, so this is the general typical day structure. Okay, market is going to trade in between this sideways movement range. Okay, but today what I told, lower boundary may broken because of POC. Okay, it was very near to that lower part. Okay, and that's what actually happened. But next part is chart pattern. On the typical day, whenever you are having the typical day, what you have to identify is, after the initial balance formation, is the chart pattern. So can you point out any chart pattern over here? I have drawn one trend line over here, that's it. Now someone will say, sir, it is the triangle like structure, or someone will say, sir, it is channel structure, anything. But it was the double bottom. Look, it was the double bottom. Now, learning is very important over here. How? It is going to be very interesting. Very. Look, breakout. When you have to take the trade, that is very important. Whenever you are watching for the breakout, okay, and the breakout, how the price is approaching that breakout point, that is very much important. And based on that, you can probably judge the either that breakout is going to be very successful at the first, or it may take some retest, it may take some halt, anything. So whenever price is approaching the breakout point with the rally, then you must have to wait for the base formation, and then you have to take the trade. And whenever if market is approaching that breakout point with some base formation or with some smaller movements, then you can go for the aggressive trades. So this is some general concept about the breakout, how to identify the false breakout. In depth, I am going to explain that in the training program. But let's have a look. This is the breakout point of this double bottom. Okay, for the prior requirement of the double bottom is the downside. Okay, and this is the downside. Okay, during the formation of the double bottom, you must have to have some downside movement prior to the double bottom formation. That's it. Okay, this is not valid for this double bottom, but this is valid. Okay, so now as soon as market is crossing this level, you should not go for the trade. Why? Because market is approaching with the rally, so you have to wait for the base formation. Now as market is formed 3 base candle, and all these 3 base candle high is quite similar to each other. So in this candle, as market is going above, crossing above this 3 candle high, you have to make an entry. Stop loss at this. Okay, not the standard stop loss of the double bottom. Yeah, if you are going for the standard stop loss of the double bottom, then you are going to have some 50% of that double bottom range. But the base candle, momentum candle concept, it is very fantastic, and this is the pure price action, guys. Okay, pure price action concept have only 2 types of candle. One is momentum candle and another is base candle. So your stop loss is something 80 points. Okay, 75, 80 points. And your target, what about the target? Target is same of the double bottom. That is nothing but something 209, 210, between 200 to 210. So from this breakout point, you have to mark the 200. So here is the range. So from this, okay, from this to this, you are going to have another 160 point, 170 point move. So this is the third trade of this particular day. Okay, I am not considering this. Okay, as a retail trader, you should not go for the trade whenever you are having such moves. Okay, go for the confirmed trade. Okay, now probably you can get something less, but that will be with very confidence, and that will be very satisfactory for you as well. Okay, the probability for the loss is very low whenever you are going for the confirmed trade. So this was the third trade for this day. Now another, analyze over here. Now you can draw one trend line like this. Okay, another trend line like this. Another is Control C, Control V. Then this is the next one. Okay. So this is the channel, isn't it? Very fast, very fast. This is nothing but the channel. At this point, you can draw this trend line. Okay. But as this is the 3 p.m., what you have to do? Nothing. You should not go for the trade. But the movement is that. And market is approaching this magical DR5. But do you know about the actual market closing? Okay, the settled closing. The settled closing is nothing but this 38,697. So 700. So on the chart, you are going to see this 850 range. And after 333 or 332, something like that, you are going to get this tick 700. So whoever have taken the entry over here for the overnight, okay, overnight move, they are going to be in the loss. Okay, so that is why it is advisable that don't go for the trade after 3 p.m. Yes, today you can go for the trade just because of the rally, not the rally, but because of the fluctuations, the volatile fluctuation. But this is the rising channel, and for the rising channel, the standard breakout is on the lower side. So market is closed at this level. So on the yesterday, the higher probability is this. The market is going to open somewhere around here, and it is going to be give you the breakout on the lower side, and it will give you the standard breakout. So this is it for today, guys. What you have to do is wait for the next video. You have to watch out that particular video if you really want to learn the price action. Okay, if you really want to know something more about the price action, yes, you may or may not be knowing about the price action much. Okay, but the next video, that is going to be very interesting, and I am going to show something very interesting. Okay, so guys, kindly watch the next video and kindly like this video. Yeah, you are not liking my videos. Okay, kindly like this video and also subscribe this channel. Okay, thank you guys. I am ending this video. Thank you.